In this video, we're going to be shooting a quick little interview with my good friend Jeff Goodman from Prime Lending. We're going to talk about him, his role, his job, and also the mortgage process when it comes to first-time home buyers. So thank you for coming.
Thank you for inviting me. I appreciate it.
Thank you for making time out of your long day to come here.
No, it's always worth the time. And like I said, whatever's important to us, we make the time for.
Yeah, definitely.
So there you go.
All right, Jeff, so really quickly, can you explain the rules of a mortgage loan officer and how it pertains to the home buying process, especially for first-time home buyers?
So we would be that person that you'd get in touch with, in my opinion, before you're talking to a realtor, because you want to find out exactly when it's time to buy a house, what can we qualify for? You know, what does our story look like? Because there's too many times where they might come to us a little bit too late, and obviously the pieces of the puzzle don't fall together. So I always like to consider like my job is almost like Play-Doh. I don't know if you played with Play-Doh when you were a kid, but I did.
Yeah, I've gotten in trouble plenty of times falling asleep with Play-Doh and hitting the sofa, car chairs. Oh, yeah. I know what Play-Doh is.
So to me, mortgages are almost like Play-Doh. We have to mold these perfectly to fit into a perfect box or circle, whatever. But our job is to basically take the scenario of the home buyer, potential home buyer, taking their income, taking their credit, taking their assets, and seeing it, what exactly can they qualify for? What are they comfortable qualifying for? And putting that all together and packaging it for them so they can go out, find that house, and become first-time home buyers, or obviously second, third-time home buyers.
Mm-hmm. And what are the main loan types out there for first-time home buyers specifically?
Okay, specifically for first-time home buyers, a big one right now is FHA, which allows you to put only 3.5% down. For our veterans, thank you very much for supporting our country. You can do 0 down if you're a veteran, which is 100%, no money down. There are conventional loans, which you can do as little as 3% down. Those are predominantly the main three. There are some other programs, but they're not like USDA, not a very popular program here locally, just because it is for rural areas. Mm-hmm. So don't really get a ton of those.
Gotcha. And what are you said the minimum down payment for each? How about seller concessions on those? Because we're currently in the market where we're asking for a little bit back. Mm-hmm. Can you give us a brief explanation on what that is?
So the seller concession is you're asking the seller to help you pay for closing cost. Mm-hmm. It varies depending on the loan program and then how much down payment is. So each program has its own requirements if you're to ask for, but it's a great way if you're lacking a little bit of money to help for your closing cost. You can ask the seller to give you some contributions to make that work for you.
Awesome. And Jeff, so what are some factors that first-time home buyers should look at or look into in terms of affording a home?
I think the biggest thing is when you're thinking about buying a home is you need to figure out what are you comfortable with. As an example, let's just say you're paying $2,500 in rent. It's going to be tough to find a mortgage payment at $2,500 these days because of the prices and the rates right now. But you need to figure out, okay, what are we comfortable with? How much more are we willing to go that makes us feel good? Because the last thing, this was the problem we had back in 2008 is everybody was working for the mortgages. And then obviously we know what happened and everything imploded. So you do not want to be working for your home. But, and obviously the lender's going to make sure you're not doing that. But you want to make sure you can figure out, like, what are you most comfortable with? Even though, let's just say as an example, let's say you make $15,000 a month and you have no debt. Well, you still have an idea of what you're comfortable with. Just because you make $15,000 doesn't mean you want to go that high on a payment. You might have in your mind going, you know what? I only want a $4,000 payment because that's what I'm comfortable with, because I have other things in life I want to travel. I've got a kid on the way. There's a lot of things in our life that changes, so you need to figure out what that number is going to be. That's the biggest thing. A lot of folks might come to me and say, okay, we want to get pre-qualified. And they might just say, I might say, well, what are you comfortable with? Well, we just want to know our max. So that is one way to look at it. But then the other way is like, what can we handle that makes us feel good? Because you still want to go out at night, go out to dinner, get your Starbucks.
Yeah, or your energy drinks. Now, I know you're not a credit expert, and we don't try wearing other people's hats, right? Like I don't pretend to be a loan officer or know all the rules. That's why we're here.
Right.
But what are some key tips that you've heard in the past that can help improve someone's credit towards purchasing a home?
I think some of them, and you're right. Yes, I'm not a credit expert, so I don't try to be act like one.
Disclosure or disclaimer.
So I can only go off of what I know and I've seen. And I mean, I've been doing this for 20 years now. But the biggest thing is looking at your debts. Let's just go with credit cards. The credit bureaus definitely ding you when you are near that maximum limit of the cards. And there's a lot of different numbers I've heard out there. When you have your card paid down to 30% or 40% or 50% of the limit, the credit companies or the credit bureaus are going to benefit you more. As of recently, I had someone pay off a collection account. Took about 2 months, and the score shot up about 30 points by getting that thing taken care of. It really varies, but just managing and not having everything maxed out is really a big piece of that puzzle. And the most important is don't be late. Yeah. Don't be late. Because that is definitely not a good factor because they will hit you every time for that.
What are some causations that you've seen or some effects that you've seen of people being late on their payments?
Well, one I heard today actually is Bar just happened to be out of town, out of state, visiting family, did not have access. The website of that company just wasn't very user-friendly, wasn't able to make the payment. Unfortunately, there was a late. I think it varies. We all go through different things in life. Things are up, things are down, things are up, things are down. So I think people look at what's most important in regards to if they're lacking money for one month or another, that they're going to focus on, okay, well, I'm going to have to pay this credit card, but I can't pay that credit card. We all live different lives, and so we all have different reasons for things we do. But, just definitely do not miss payments. No matter what you do not miss payments. Yeah, that's huge.
So key tip for today, do not miss your payments.
Don't be late.
If you take out loans or anything like that, make your payments. Just
make your payments. Whatever you do not miss your payments. Tip of the day.
Tip of the day. Now, you and me have held open houses multiple times, and people always tell us, oh yeah, I can afford this home for $800,000. I've been pre-approved, I've been pre-qualified for this house. I can afford $800,000.
Right.
You and me both know that pre-qualification is a little different from a pre-approval. Can you please explain that?
It is. It's a big difference. There's two theories behind that, and, ways to look at it. And some loan officers may not want to take the second road, but one road is the pre-qualification is I've got your name, address, phone number, personal information, date of birth, social. I've got your income information. I've got your credit pulled. I've got your asset information. We plug all that into the computer. We run it through the decision engines, and everything looks great. You're pre-qualified. Prints me out a piece of paper. It's a piece of paper. The second avenue is, okay, you know what? Let's take this to the next level because, in my opinion, it really is better to have a pre-approval rather than just a pre-qualification. So we'll package everything up. We'll send it to underwriting, have them review everything just to double check to make sure we are doing everything, I've done everything correctly. Because when it comes to income, sometimes it does get a little confusing, especially if you're an hourly employee. You have overtime, commissions. Well, all that stuff's looked at differently. So it's best to have an underwriter review that stuff and make sure that we are doing it right. Because if they have, or I have, then they will go ahead and they will approve the loan. They will give us a commitment letter. So now you are definitely 100% approved. And as I tell everybody, go find me a house. So we've just taken out, a good part of the equation, time out of the equation as well, but you're now shopping for a house with more confidence than just a piece of paper, because things do happen. Things do happen. Just thinking of the other day, we had someone who got into contract and come to find out he happens to be on disability right now that we didn't know about. So it really adds up.
What happened with that?
Having to look at add other borrowers, add some family members, because he's on disability that wasn't made aware of until, unfortunately, it was too late. And so now we're having to look at adding some other people to help make this file work.
What are the negative drawbacks of adding multiple people?
Well, they'd be non-occupant co-borrowers. Okay, so every program has its guidelines in regards to non-occupant co-borrowers, which the non-occupant co-borrower is basically someone who the lender knows is not going to live in the house. They're qualifying with their credit, they're qualifying with their debts, and their income. So every loan program has their qualification for that. There's nothing wrong with it. But, if you're asking the drawback, obviously that person, that other entity, they are now on the hook for that mortgage. So if you and I are buying a house and then we bring in my aunt, if you and I decide not to make the payments, she's now on the hook for that payment. That's the only drawback.
Gotcha. And how would you get that person off of the hook? Let's just say months go down or years go down, and now we want to take aunt off of it and just handle it ourselves.
Right.
What would be the steps?
The only way to do that, to get someone off of a loan, is you have to refinance. That's the only way to get someone off of a loan. You can take them off title. That's one thing. Because you can remove someone from title. You can add someone to title. That's easy. But the only way to get them off that loan is they have to refinance. So if you and I are on the loan, we want to take the aunt off, then we have to be able to qualify on our own.
Gotcha.
Sorry.
before your watch picks up another call, are there any specific programs right now or incentives that first-time home buyers should look at?
Well, the most popular one that I've been dealing with are down payment assistance programs, because it helps them get down payment assistance. And depending on the program, there might be some closing cost assistance as well. And so those are FHA, conventional. Actually, I have a VA loan right now where we're doing so obviously for VA loans, they don't need down payment because they're doing zero down with their loan. But there's a program that we can help get them funds for closing costs. So those are the biggest. Those are the most popular ones right now. Down payment assistance programs for first-time home buyers.
Gotcha.
If they are needing some assistance. Not everybody needs assistance, but some people do, and there are definitely programs out there. You do not have to. Let me say this: you do not have to be a first-time home buyer to get down payment assistance. Right there. Yeah. Tip of the day.
Second tip of the day: you don't need to be a first-time home buyer. Also, really quickly, what is a first-time home buyer in terms for Freddie Mac and Fannie Mae?
Typically, a first-time home buyer is someone who hasn't owned a home within 3 years, hasn't been on title of a house in 3 years.
Gotcha. So, so someone could have had a house 5 years ago, got rid of the house, one reason or another, not on title anymore, and they can apply for first-time home buyer programs just like that.
Because they're renting now for the past 5 years. Yeah, they're considered first-time home buyer.
Gotcha.
Yeah.
How do buyers navigate through the down payment requirement, and also what are some tributes that they can look at for down payment assistance?
Okay. So as I mentioned, the down payment assistance, there's here locally, there's two, in the state, there's two very popular programs that we have through the state agencies. And they help, like I said, they help you with the down payment. Depending on the rates that day and the programs, they might help you with some closing cost assistance as well. But, if you weren't aware, so how those work is they are second liens on title. So you have your first mortgage, and these will be a second lien. Some of them are silent, which means they don't have a payment. Some of them might have a payment, but there's always going to be a second lien on your title of your house. And so, some of them need to be paid back when you sell the house or you try to refinance the house. But like I said, some of them, and the same thing, if you try to refinance, because they don't subordinate, they're going to be required to be paid back sooner than later. So, that's mostly how all of them work.
Gotcha. And what does it mean by a loan subordinating?
Loan subordination basically means where, in layman's term, I'm asking to put a new loan in first position. Okay. So I've got a first, I've got a second, and basically to resubordinate, we're basically saying, hey, we want to put a new loan in first position. Are you okay with that? And down payment assistance programs, obviously they say no, they don't do that. So, but if you have, let's say, if you have a mortgage now, you have a first mortgage and you have a HELOC, a line of credit on your house, and rates drop and you want to refinance your first mortgage, obviously one of the options is you can replace the first mortgage with a new mortgage. You're subordinating the second, just leaving that HELOC alone, not touching it. Okay?
Gotcha. And can you explain the concept of PMI and when it's required?
So private mortgage insurance, it's that ugly word. Private mortgage insurance is when you are putting less than 20% down. Okay. What this is doing, it is protecting the lender if for whatever reason you decide to default one day. So anytime you're doing less than 20% down, you're going to pick up mortgage insurance. Typically, now there are two options, especially with like conventional. There's borrower paid mortgage insurance and there's lender paid mortgage insurance. So borrower paid mortgage insurance, where you're going to see it every month on your mortgage statement, and you obviously see it, and eventually one day it's going to go away, based on the value of the house and how much you've paid your mortgage down. Lender paid mortgage insurance is where you will not see it. It's actually built into the rate of the mortgage. Now, lender paid mortgage insurance, your payment typically is going to be lower than by you doing the borrower paid. But the thing is that mortgage insurance won't go away because it's built into the rate. So for you to ever get rid of mortgage insurance, in essence, is you're going to have to refinance one day to try to get a lower payment to get a lower rate. But it's always built into the back end. You'll never see it.
Gotcha.
Yeah. And then FHA, FHA's always got PMI, 3.5, when you're doing, because it's 3.5% down loan. So you're always picking up mortgage insurance.
Yeah. I was just going to ask you, what's the difference between PMI and MIP?
Mortgage. So PMI is private mortgage insurance. And then MIP is your, FHA's way of calling it mortgage insurance premium.
Gotcha.
Yeah.
So what are some common pitfalls that first-time homebuyers usually go through?
So I'm going to talk about one pitfall that's come up a lot lately. And I think a lot of people don't talk about it. And actually, I just signed a petition for it as well. But I'm going to tell you, if I were looking to buy a house, whether I'm a first-time home buyer or not a first-time home buyer, one of the first things I would do right now these days is I would go online to optoutprescreen.com and opt out. Okay. And then secondly, I would go to the do not call registry and I'd register my phone number on there as well. And the reason why I would do that and why this is such a big topic these days is because once you apply for a mortgage with a mortgage company, your information is captured by the credit bureaus, and this is called a trigger lead, and they in turn sell that information to telemarketing companies. So once we pull your credit, you're going to start getting blown up by telemarketers, people wherever they're at, trying to pitch you for everything under the sun, obviously regarding mortgages. And so it's become a big topic, because borrowers will call us, say, hey, why am I getting all these phone calls? Well, it's not me. I didn't do it. It's the credit bureau. So we have to explain, hey, the credit bureaus are selling your information is what's happening. So besides going online and opting out, doing the do not call registry, other options are, if you miss that section or miss that completely, is I would make sure to tell my loan officer or ask them, can you do a soft pull? Because we can pull credit as a soft pull and it doesn't affect your credit score. And it doesn't create a trigger lead. Okay. If that doesn't happen for whatever reason, the third option, which I find myself doing a lot as well, is I will put in a dummy phone number and a dummy email when I'm doing the application. That way, when I'm doing the credit report, it's pulling, but now it's got misinformation. And so these people can't reach out to you. and then we could obviously go back in and make the corrections later down the line. But to me, that's a big thing that's happening right now, and it's creating a lot of confusion, a lot of chaos, a lot of upset people. And so I think it just, like I said, I signed a petition that they're trying to send up to Congress.
Yeah, and I've heard crazy stories where people will say, hey, this is Brad working from Jeff Goodman's office. We just went through your loan, and they'll pretend like they're a part of your team.
Yes, and I told you that we just had that happen a week ago with someone on my team. This telemarketer called the borrower and said he worked with the gal on my team, and that was obviously totally incorrect and false information, and just trying to hook them, and obviously lying is just not the way to build relationships at all.
And you said soft pull and hard pull. What's the difference?
So soft pull, it does not affect your credit. So it gives us, the way the systems are built now, we are now able to do a soft pull where it does not affect your credit score, and we can still get credits. We can still get scores. They're not hard scores, but they allow us to decision a loan, is what it does. So we can still get an idea where you fall at in line. Now, let's say then tomorrow you get in contract on a house. Now we've got to pull that hard pull. We've got to get that pull from the credit bureaus of a hard inquiry. So we definitely have to get that. You can't go through the whole process on a soft pull. But it, like I said, the hard pull affects your credit. Soft pull does not.
A soft pull is adequate enough to give someone or to issue a pre-approval, right?
It is. Yeah, it is. Because I've been with Prime now a year, and we just had this, this came about to us within the year that we've actually been able to do soft pulls. My last company, that was not even an option. But I think it's becoming more common, more on the broker side. I don't know about the bank side, but it's very common to do a soft pull unless, yes, you can get pre-qualified with a soft pull.
Okay.
So that's, if I was a buyer, those are things I would definitely be doing. Tip number 3.
Tip number 3. We have a list of tips today. Now, how does the mortgage application work? How does that process look like? Or what does that process look like?
Well, there's, a couple ways it can be done. Obviously, the easiest way these days is, talking with someone on the phone and sending them a link to do an online application. It's easier for them to do the application themselves because obviously then I'm not going to mess up by writing down the wrong information. Probably takes them, let's just say it probably could take them 10, 15 minutes online to fill everything in. The way the systems are built these days, it doesn't matter which company you're working with. You can upload your pay stubs. You can upload your W-2s right into the systems. And then you can actually go online while you're into the system, and you can have it pull your banking information for you as well. So by the time we actually get the application, it could almost be a full application, and it could be ready to go. And so it just makes things so much smoother. Granted, there are obviously people out there who just may not be using computers as much as some other people, and there's nothing wrong with that. You can still do the old school way. We just do paper and pen and ask the questions over the phone. And third way is obviously just sitting down face to face and doing it that way. Don't see that as happening as much anymore, but the online application makes it so simple. And basically, if I just send them a link, they can do it on their phone, they can do it on a computer.
And for your standard first-time home buyer, what documents are required for that pre-approval or that mortgage application?
Standard first-time home buyer, 30 days pay stubs, most recent 2 months bank statements, obviously for their assets, copy of their driver's license. That's it. Now, if they're self-employed, can be tax returns, but those are the standard documents.
And what are some recent changes or trends that we're seeing in the mortgage world that first-time home buyers should be aware of?
Well, I think the biggest change, and it's no surprise. You and I talk about it.
Hit me with it.
Inventory.
Yeah.
Inventory. I saw another post, reel from someone just last night, and it was funny. I meant to comment on it, but I didn't. Just talking about the market in general.
You're window shopping.
I told myself I should have commented, but just talking about inventory levels, and I think we all believe that rates are going to come down one day. I don't have a crystal ball. I have no idea when that's going to be. I don't know. I'm not that, that financial person like that.
Yeah, and those people have also been shot down recently.
Yeah. So, but the idea was, in regards to inventory was, and I'm just commenting on something I saw that someone had a stat on that, basically said for every 1% the rates will drop, there are 5 million potential home buyers that are going to jump into the market.
Mm-hmm.
So what is that going to do?
Well, just like 2021, we couldn't get offers accepted for the longest time.
Exactly. So if we've got an inventory issue now, and if rates were to start dropping, now more people are going to come into the market. It's going to make it somewhat more difficult in regards to getting those offers accepted. We have an idea what it could do to prices, but so that's why I always suggest now, if you can afford a house now, you want to be looking at houses now. Don't wait, because 2024, we don't know what's going to happen. So if you can afford a house now and you're thinking about buying a house, now is the time to do it. Don't wait. Because yes, the rate might be a little higher than what you're wanting, but you can always refinance later. Mm-hmm. That's the idea behind that. So I'm not going to say marry the house, date the rape kind of thing, because that's played out.
Yeah, it's definitely played out. So what's some advice that you have for renters transitioning into first-time home buyers?
I think just have an idea of what you want. Yes, I think from what I hear a lot of is, as a renter, you have an idea of what you're looking for, but once you get out there, realizing, oh no, I don't think we can get to that point. Mm-hmm. And this is just an example. Let's just say I want a 4-bedroom house, 3-bath, and I want to be in Elk Grove for $450. Probably not going to work. Mm-hmm. So I think you got to be under the impression of like, okay, we have to come off of the list of items that we want, because more than likely this is not going to be for your ever house. You're going to move. I don't know about you, but I think in my 20 years, I've probably moved 5 times. Mm-hmm. So it's, I'm probably in my forever house now, but
this wasn't your first house.
No, this was not my first house. No, not at all. So, like I said, I think this is my 5th house. So just because moving around, moving up, moving down. So you kind of have to think about that. It's like, don't think of this as your forever home, because more than likely, you might start as a first-time home buyer. You're a couple. Well, what comes next? Dogs. You might need a bigger yard. After the dogs comes children. Once you get children, might need to get a bigger house. So a lot of things happen in life. Maybe parents, brother, sister happen to move in with you. Who knows? So I just think be a little more open-minded in regards to what you want and then what is really available right now. Mm-hmm. That's how I think of that.
Yeah. And no matter who your team is, your realtor or your loan officer, definitely ask these types of questions to help best educate you as the buyer.
100%. That's what your realtor's for. I am just a loan guy. I'm not a realtor. I don't try to be a realtor. That's why I look to you as the professional.
Can you share some success stories or memorable experiences from helping first-time home buyers throughout the process?
Think of a lot.
Give me 1 to 2.
I can just think of one right now. Just to give you an example. And I don't know if I've gone into detail with it, but VA buyer, and looking, doesn't quite have enough money for the down payment. For the closing cost, because obviously you still have closing costs, title company, lender fees, taxes, insurance, those kind of things. So there's still fees involved. But going through the state program, because as a veteran, can get him 3% towards his closing cost. Mm-hmm. So literally they're really coming out of pocket with hardly no money at all. Not a whole lot. Which is just like, it's such a great win for that veteran. I can think about a couple that I just did a couple months ago, first-time home buyers, and they use down payment assistance. And it's so rewarding, obviously, that they're so excited, great family to work with. I mean, you asked for something, they gave it right to you, and it's just a great feeling when we're there, we're at the dining table, and you just see the smiles on their face, and like, this is why we do this, because we're helping people, because as we've heard many people say, it helps generational wealth. I mean, real estate is one of those ways to obviously help that out.
And we are both not, and we're both not those types of professionals that just push you to sell or push you to buy. What our main goal is to help you make a decision and to help you get from point A to point B.
Correct.
And that's something that we've kind of seen go back and forth, especially when times are rough with the real estate professionals.
That's so true, though. I mean, because obviously there's people out there who, for lack of a better word, just want to get paid. But I don't think that's why we do this. I think we're here to help people. And if it doesn't work now, that's okay. But maybe in 6 months, if we put the plan together for them that gets them prepared for that time, I think the reward is more. I mean, I think they're more grateful. I think you're more grateful. Like I said, not everything happens instantaneously, so it takes time. And that's what, I think someone said to me, they said, at least we know you're working hard for us. Makes you feel good.
Yeah, 100%.
Yeah.
Now, last question. What are some key takeaways? Last question. What are some key takeaways or actionable steps that someone who's renting or living at home right now can take towards that home buying process?
I'd say the first thing is just getting in contact with someone, a lender. Myself would be great. But like I said, you got to put that action plan together, okay? Even if you may not be ready now. Let's say you're thinking a year from now. It doesn't hurt to sit down, take a look at everything and see where you're at. Because when that time comes, now you're ready, but at least we can put a game plan together for you. But by waiting to the last minute, things might not be so great because maybe there's some issues we got to take care of. So I always tell everybody, like, even though it's not now, it's okay. To do a pre-qualification, it doesn't cost you any money. I don't need something from you besides pay stubs and W-2s and, bank statements. But this doesn't cost you anything, but let's put that plan together now so we can get you ready for whenever that time may be that you're wanting to do this. But without sitting down and having a loan officer look at all these things, in essence, you're just kind of going through life wondering, what can I buy? What can I afford? And you're just going to always wonder. You might find yourself on Google going, okay, well, what's a rate and the payment look like, et cetera, but have you really put it all together? Because that's what's most important. It's getting it all put together.
Yeah, and that's the main point about talking to a professional is that they'll help guide you towards putting everything together.
Exactly. 100%.
Thank you for your time today.
Yeah, you're very welcome. Thank you.